I'm joined by independent economist Warren Hogan here in the studio. Warren, thanks for your time. 25 basis point cut tomorrow's kind of locked in, but could the RBA do more than that?
Well, they certainly could. The markets think so. The markets have got the cash rate going all the way down to 3 or a little bit below early next year and are looking for a follow-up cut in August. So you go back 4 or 5 weeks after they cut in May and gave us this signal they're worried about the global economy, tariffs, this sort of thing. They were giving us guidance that they're happy now to take the restrictive setting away, to get the cash rate down to about 3.5%. The market has projected that to continue all the way down to 3. The question is the market overdoing it? What's really important tomorrow is the statement and the governor's press conference, where she will give us some guidance on what they're thinking given developments of the last 4 weeks. So, look, they can cut again. I don't think August is a slam dunk, as the market expects tomorrow to be. And the real risk tomorrow is obviously a less concerned RBA. And, of course, the big risk is they don't move at all. But I think that's pretty unlikely, because I think they're happy to get that cash rate down to what they're thinking is neutral, about 3.5.
Yeah, if they were going to hold rates tomorrow, I mean, what argument is in favour of holding rates tomorrow?
Well, it's the arguments that have kept the Fed on hold. Now, of course, we aren't the centre of the Trump tariff sort of concerns, and of course that is inflationary to the US. But the underlying dynamics in the US are coming through here. That is, although our GDP is not great, as you mentioned, productivity is a big reason, we're actually generating jobs, unemployment's low. And although measured inflation's come down to the top of their target band when you get rid of the effect of subsidies and this sort of thing, the fact is business costs are still running at around 5%. The fall in inflation's all been because of a squeeze on margins. So there is still inflation risk. The economy's holding up all right. So there is a argument, a very valid argument, one I don't think the RBA board will take, but that you need to be cautious. The inflation's not gone. The economy's holding up. You know, this is really what the Fed's doing, of course, with this risk of tariffs. But look, I think they'll go, and all of the really important stuff is what signal they send through their communications.
Yeah, we've seen some pretty soft retail sales numbers recently as well. Sort of the Aussie consumer obviously not feeling super confident yet, despite 2 cash rate cuts, and they're not spending that much money out there in the economy. Yeah,
look, that is the big issue for inflation, for growth. So we had a really strong recovery in Q4 last year. We got a weak number. Consumers went back into their shell in Q1. The retail number last week for May wasn't great, but actually we need to ignore retail. That report's gone. The new household spending indicator will replace it in a month or so. And they released that, the ABS released that on Friday, and that was actually okay. So it's still not clear whether or not the consumer has sort of gone back into its shell permanently, or whether the recovery is just sort of very gradual and not in a linear fashion. And of course, you look at the housing market, and that's doing really well. So that's telling you the rate cuts are helping that market, getting consumer confidence around buying houses up. And it really should start to translate into consumer spending. If that happens and businesses pass through costs, inflation stops falling, RBA stops cutting. So there's still a lot of uncertainty out there, and I think the RBA was very worried about what tariffs will do to the economy and the risks they posed. And although that hasn't gone away, we know markets have moved on and are now at record highs, as you noted. And property markets here are at record highs. So I think the RBA is going to be very careful once they get policy down to about 3.5, i.e. after this cut this week or tomorrow. After that, I don't think it's a done deal. We get more rate cuts despite market pricing.
The other thing the RBA board are talking about at today's meeting and tomorrow is publishing the votes for who voted which way when it comes to a rates decision. And they'll only publish them if there's a split on the Monetary Policy Board. But do you think this is another good thing coming out of the RBA review?
Look, I'm not sure. We've got to see how it works in the Australian scene. We're very different to just about everyone because of the broader focus from the community on monetary policy, because we have, well, one of the highest household debts in the world, and we have a lot of variable rate mortgages. So there's no country in the world where the central bank gets the broader community looking at what they're doing like we do here in Australia. I would say that if you're going to publish the votes, that's fine. You should attribute them. If you don't attribute them, then we don't know. And if they only do them when there's a split, which would, obviously be the time when it's important, we don't know who's doing it, so we don't know what to read into it. So I think you either do it with attribution or you don't. They won't do it with attribution, so I think they should just not bother.
Warren Hogan, great to chat.
Thanks, Ed.